Richard Southern is off today, but we've got senior business editor Mike Eppel in his place. Lots to chat about today, Mike, starting with the cost of borrowing money. It is on the rise once again.
Yeah, nice to see you, Erica. I wish I had better news, I suppose, from a mortgage holder's perspective, but the Bank of Canada today did what they basically said they were going to do, raise interest rates for a seventh time this year, and a little bit more than perhaps some thought, by 50 basis points up to 4.25% now. So this is the highest benchmark interest rate we've seen since 2008. Interest rates have gone up. The Bank of Canada has raised rates 4% since March. Think about that. How that adjustment, that sudden adjustment that a lot of homeowners and mortgage holders are going to have on their monthly payments. If you have a $450,000 mortgage on a variable rate, your monthly costs are going up by about $1,000. That's $12,000 like in a year's time. It's getting much more expensive for debt servicing costs, and this is something that they're trying to slow the economy. That's what they've been talking about, to fight inflation, bring inflation down from the 6.9% where it last was at for November, and it looks like they may or may not have further rate increases to come on January 25th, the next policy meeting. They say, however, they will be data dependent and maybe might move to the sidelines at that point, just to see how all of these interest rate increases are affecting consumers and homeowners and everything else in the economy. The one silver lining is that for fixed income investors, GIC rates will be going up as well.
Another silver lining here, interest rates may be going up, but gas prices continuing to fall.
Yeah, to the lowest price, in fact, since last December. Tomorrow we'll be looking at $1.38.9. So that's pretty good, at least historically speaking. It's much better than what we saw just over a month ago, when we thought gas prices would be going up to around $2 again. But what's happened is the price for oil has dropped dramatically to below $73. And that's at the lowest price in a year. So it's followed that. So the global economy is slowing. The demand metrics for oil have cooled off quite a bit. And we're looking at a lower pump price. Hopefully, that actually helps with the fight against inflation, brings down transportation costs and maybe the cost of transporting goods as well.
All right, it is a tough time for brick and mortar business, but one Canadian retailer is bucking that trend.
Dollarama. And this is directly correlated to inflation. They're seeing much more demand for lower priced items because people are looking for the lowest cost for food and other household goods. So they're going to Dollarama, and Dollarama's earnings in the latest quarter were record-breaking at $200 million in profit. We're looking at the company expanding its store count between now in 2031. They want to double the number of locations across the country over that course of time. And their same-store sales metrics were really strong. And the stock today on the TSX hit an all-time record high.
All right, we have to leave it there. Thanks, Mike, for joining us. Always great to see you. That's Senior Business Editor Mike Eppel.
Thank you.